Hey guys, and welcome back to another episode of my Let's Discuss series. Today I'm going to be talking about some of my own personal investing rules that kind of help me decide what I invest in and how I plan to invest in the future. Just wanted to share with you guys some of these tips and tricks that I use. Many of you probably try to use some of the same ones, but I thought it might be nice to kind of give my view on some of these. As always, like and subscribe if you enjoy my content. I really appreciate it. If you haven't already, check out my latest episode of the M1 Journey. I posted that on Monday. Let's get ready to discuss my investing strategy. So, I guess every investor kind of has some rules and principles that they kind of go by when they invest or try to, for the most part. I have several myself. Today I plan on talking about five of them, five of what I think are the most important ones. These are just things that I kind of keep in mind when I make investments and how I plan my financial future. These are different things that I think could interest people for their own personal investing strategies. Taking in mind, I'm not a financial advisor, I'm no expert. I just do this for your guys' entertainment and really just a hobby for me. So please do your own research, do your own investing at your own discretion. We'll go ahead and get into it. So really the first rule that comes to mind that I strongly consider whenever I'm investing is when I do invest, I want to invest in stocks and in companies that I'm familiar with. I want to invest in businesses that I understand. So things that either I use in my own personal life or that I'm very well acquainted with. Because the way I see it, if you're investing in a business and you don't know what they do to make money or how the business works, then you probably shouldn't be investing in it. So for me personally, things like Disney and Microsoft and Apple come to mind. Those are big companies, very well established, and they're all companies that I either use their products or services. So those were pretty easy to invest in for me because I understand their business and I think they have good businesses that will continue to grow for the foreseeable future. And then on the other side of that is the term FOMO is thrown out there a lot, which is the fear of missing out, which happens a lot for investors. Different stocks will really take off and people will be like, wow, I wish I would have jumped in, or the share price just really, really skyrockets and think, wow, I got to get in, I got to buy. And they buy into that company or that stock and they don't really know what they're buying. That happens quite frequently. There's different companies that are hyped up as being the next big thing. And a lot of investors jump in really quickly without really understanding the business. And that's really one thing you want to avoid is you want to avoid the fear of missing out, I think. So that would kind of be my first rule, which is invest in familiarity and while also avoiding FOMO. So the second kind of rule I look at very closely is knowing what my goals are. When you're investing, it's important to know what you want in the future and what you want to see because you need to define what success is. So that can come in a number of ways, either by some kind of growth metric, say you want to grow by X percent each year. A good number for that is 10%. 10% is what the S&P 500 has averaged over the last 90 years in annual growth. That's kind of a nice number that people either aim for their portfolios yearly to either meet or exceed, because it's nice to exceed, obviously, the major indexes. But if your goal is not really growth oriented, maybe you're more closer to what mine is, which is dividend oriented more so. You want a dividend yield of 2%, 3%, kind of keeping in line with some more of a safe yield, but also being able to generate some income off of that. So really knowing your goals and having clearly defined and achievable goals is really what's important, because everyone wants to have the stock that they invest in and it goes up 10-fold, 50-fold, but those are kind of hard to come by and not very realistic to expect, always. Now it absolutely can happen, but I don't think it's something that is worthwhile to aim for. I know day traders and swing traders kind of look for that. That's not really my strategy. That's never really been something I strongly looked at. But if that is you, then that's okay too, as long as you just know what you're doing and you're being safe. So the third rule, which is kind of not so much a rule, but just being aware of, is to not be afraid of loss or to lose money. Because when you're investing and you're putting your money out there, it's something that not only can happen, but inevitably will happen. You will have losses. I mean, it's going to happen. There's just no investor that's never lost money. But the important thing is to not fear that, because it's going to happen. So why fear what's inevitable, you know? And that's not to say that, oh, well, any loss is good loss, because it's not. But loss also gives you an opportunity. You know, if there's a company you really believe in, really has a strong future, but they kind of have a tough quarter, tough couple months, maybe even a tough year, and their share price gets beaten up, that might be a great buying opportunity, you know. So a company I kind of talk about a lot, and I see that with right now, is like AT&T. I believe AT&T is a good company, and in recent years they've kind of been beat up, and I think AT&T is at a good point to buy, and I think ultimately in the end that could pay off. I could be wrong about that. I very well could be, but I mean, I am conscious that I might be wrong, but I'm strong enough in the belief to think I'm right to continue buying AT&T. Another example of that is IBM. IBM's been beaten up. IBM's a company I really like, so I will continue to buy IBM on prices that I consider to be a little bit cheaper, even a bargain. So my fourth rule that I'll talk about is the experts, or so-called experts, are very often wrong. Everyone's always predicting the next big downturn, the next big rally, you know. It's the next big thing's around the corner, or old companies, the established companies, are on their way out. You know, the experts often like to make predictions, and oftentimes they're wrong. You know, the next big thing may be on its way. You know, some of our older established companies may be on their way out. That is true. That's how the business cycle works. But often I think they're a lot more extreme in their positions than the average investor would be. So that kind of influences people, because it either hypes up different companies or different stocks, or it really kind of beats down other companies that they're not talking about as much. So I just want people to be conscious with it, to not always just put all their faith in experts. And that even goes towards myself, and probably other YouTubers would agree, is that we're not experts. We're not anyone who knows anything more than anybody else, but it's conscious to know your own beliefs and do your own research, and not just listen to any one person or organization. So the last rule I kind of want to discuss, and ultimately I think it may just be the most important one, is it's very, very true that investing now is always better than investing later. Now, I know people are probably watching this and thinking, well, Bryce, I don't have hundreds, thousands of dollars to be investing right now. And absolutely, that's true. Everyone's has their own circumstances. But even if you can put in just $10 a month, or any amount of money now, is far better than doing it in the future. Now, through the past, there's been some pretty bad market crashes, there's been downturns, there's been economic turbulence, everything that you could imagine has happened. But ultimately, in the end, we've come back from all of those, whether it be the 2008 financial crisis, whether it be the dot-com bubble bursting, whether it even be the market crash of 1929, and even this year with the crash due to the pandemic. We always come back. People are very anxious to want to sell or to want to get out of the market, but ultimately history has shown that the best course to take is just to hold. The market usually comes back strong. I'm not going to say it's not turbulent. I'm not going to say I don't worry sometimes that, wow, I'm losing money, or wow, things look pretty ugly out there. But I think ultimately the best decision that can be made is to stay in the market. And people think that, oh, they can't invest now, they don't have the money, and that's true. I mean, everyone needs to take care of their own financial situation first before they put money in the market. But to all you young people, because I know that's the majority of my viewers, now is the best time. Start saving for retirement now, because everything you do could be just exponentialized in the future. Every every dollar and cent you contribute now could be worth a lot more in the future, and that's not guaranteed. Nothing's guaranteed, but I'm pretty strongly in belief that everything you do now will ultimately pay off pretty huge in the future. So that's another thing I want you guys to keep in mind. So yeah, those are 5 of my top investing rules. I hope you guys kind of take that into consideration, and I hope you guys maybe apply some of those in your own personal investing strategies. I do realize that they're probably not the most extreme positions or stuff you probably haven't heard before, but sometimes the basic rules are sometimes the best. So as always, please like and subscribe if you enjoyed it. I haven't decided what I'll be talking about next week. Next Thursday is Thanksgiving, so I kind of want to get ahead on that, so because I plan to be home with my family. But I do have a poll on Twitter as in regards to what my next stock I'll talk about in my Let's Discuss video. Right now it's between Boeing, Tesla, and IBM. And so if you're interested in that, go check out my Twitter page at bpruitt_YT. So if you have any thoughts, share those in the comments. And I look forward to seeing you guys in the next video.